Yeah. Intermission. Jesus gave us that job description, man. So get busy. Yeah.
We on the grind and we ain't gon' stop. Crew said we on duty like them plain clothes. Caps we ignited in us fire, much flame so hot. We was lame, dumb slaves, we was plain robots. Ever since we been clean out of stain.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What's good, y'all? It's your partners, and you know what goes on every time, y'all. We got a problem with Instagram, y'all. Give me a second, y'all. Everybody, their mama wants us on Instagram too, so y'all give me a second. I don't know what's going on, but bear with your partner real fast. It's all good. They just kicked us off, boy, real quick, boy. But Instagram said, no, sir. Hold on. I got y'all, man. We got y'all. All right. We gonna create. Here we go. We back, y'all. Okay, we back. We back. Okay, my bad, y'all. We had to get it right on Instagram. They tripping. We tripping. Well, y'all, what's good? What's good, y'all? It's your partners. We up in this thing, man. You see that you still looking better than you. Take that damn picture for your mom and them guys. Well, Cliff, man, while I'm getting everything set up, man, how was the week? How did everybody, man? What's going on with you, man? What's going down with you?
Man, doing all right, doing good, man. You know, this week's slow. Slow. The market's slowing down, man.
Yeah,
It's slowing way down. So we hoping to see some
yeah,
change, but
yeah.
I don't see it no time soon.
It is slowing down a little bit, guys, man. We back on Instagram, y'all, so forgive us for that, but it's all good. We still look better than you. Take that damn picture for your mom and them. I'll be pose on you. It was a good week for me as well, Cliff, man. We've had to make a couple little pivots because of the market. I know that me and Cliff come on, we talk a lot about real estate, which is great, but just because we are in real estate doesn't mean that we know everything. So we got to make pivots ourselves. And so, which is pretty cool because we get to experience things that you may not experience, and we can advise you on what not to do. But it's all good. What we see on Instagram, Virtuous says that thank God I got the asking price for my house. Congratulations, Virtuous. Keep doing your dang thing. We up in this thing, y'all. Again, somebody that follows us guys on Instagram, she killing the game. Congratulations, baby girl. Hand clap of praise. But guys, let's dive into this thing real fast, Cliff, man. You know what we do every single time, guys? We begin every session with the current market analysis. Me and Cliff believe that it's wise for us to every week look at what's going on in the market because in this market, it's turning over and over and over again. And so we got to kind of advise what we're experiencing and then advise on what may be wise for your context. All right, guys? So we're going to bring in our partners again from Valuetainment, man. We back in the saddle, man. Here we go. I'm going to do it like this for us, Cliff, so they can see us live and big time. We're gonna bring them back in real fast, guys. This is about the jobs report, guys. As you guys know, 4 days ago, jobs report came out. It's a little shaky. And so me and Cliff, we're gonna listen to what the PBD team is saying, the Valuetainment team is talking about it, and respond to that. Then we're gonna get into our topic about what we talked about. All right, guys, here we go. Let's get down to it. Let's go here, and let's go.
45,000 jobs and 145,000 in March. Well below expectation, ADP says. Okay, so this was a topic that everybody was talking about the last 24 hours. This is down from an upwardly revised 261,000 in February, down below Dow Jones estimate of 210,000. The first quarter hiring averaged around 175,000 jobs a month, a sharp reduction from the average of 397 just a year ago in first quarter. Okay, according to ADP's chief economist Nella Richardson, the March payroll data is one of several signals that the U.S. economy is slowing down. Employers are pulling back from a year of strong hiring and pay growth, with pay growth now inching down. Job growth was almost evenly split between services and goods producing firms, which is unusual. The U.S. economy is heavily service-oriented, so the services sector generally produces much stronger hiring gains. Tom, why should we care about this number?
So there's a couple numbers to care about this morning. And first of all, happy Good Friday to everybody. Yeah. And hopefully we give you some good ideas and some things to use with these stats as you manage your life and your business. Listen to these stats. There's a couple things going on here, Pat. Do you ever have like your favorite basketball team plays and you see a couple things that happen, and what happened maybe at the net really started like 45 seconds ago at the other end of the court, and things were forming and they come together? Or it's your favorite football team and you see something happen, you say, well, it really wasn't the touchdown, you have to go 2 plays before that.
Momentum being built up.
Correct. And things happening. Well, here's what's interesting happening. And Rob, if you could be ready with the chart I sent you. Right now, there are 3 things that are moving together right now that are very bad. It is the change in job openings is dropping. So the number of job openings is dropping. When we saw the layoffs a week ago with Meta, remember, part of the Meta was, well, we're laying off 4,000 more people, but we're canceling 5,000 open jobs. So people that day that went online looking, hey, Meta's got like 5,000 engineering jobs. Poof, they were gone. So they call that net 9,000. So they eliminated 9,000 jobs. So those job openings are going away at an increasing rate, number one. And number two, the private payrolls rising less than expected means there was hiring, but less hiring than was expected, number two. And then number three, the percent change in quits is dropping through the floor. Let me explain quits. The government actually tracks the number of people that quit jobs, and this is before they get an unemployment check. Because when your Social Security number is with the IRS and you're going to get a W-2, they know who you work for. And if you change jobs at the end of the year, you get 2 W-2s, one for this job, one for that job. So the government can track when your Social Security number moves from one company to another, and they call that a quit or a job change. And so they get the stats. So what you have, everything coming together here, there's a chart that can they see that right now? Perfect. So you take a look at this. This is by regions. And there's a government chart that you can look at anytime you want called JOLTS, J-O-L-T-S, which is Job Openings and Labor Turnover Survey. And it'll tell you like the temperature of your region of what's going on for the job economy. And right now, job openings are down, lowest since 2021. Layoffs are up, and it's not just tech, and quits are down. So people with jobs are not quitting at the same rate they were in any of the previous 3 years, Pat. Remember, it was fashionable to quit, walk across the street, tell them, and I want to work from home, and I want to bring my dog to work, and I only want to work 4 days, all those things, and I want 20% more. And employers were kind of desperate for workers. And so during COVID, sometimes they said yes. So the workers kind of had this leverage point. And as you've said on the podcast, a lot of times workers overplayed their hand because 3 years later, they're looking for layoffs, and the boss is saying, okay, who took me to the bank?
What's unique about this, though, Tom? So what's unique about this? What is this saying?
All of these things coming together are saying that we have a very soft job market right now, and you've got the...
Now, Cliff, do you agree with that, man, that us having a very soft job market? What do you think about that?
Yeah. You know, the market right now it's on purpose. This is all, man-made. So the market is, if there's no money being made, I can't pay employees, I can't grow. Every company, I think right now, is basically in defense mode.
Yep. I agree. Now, what do you think is causing this type of soft market?
High interest rates.
So basically the cost of capital and the cost of goods and services, really goods, is driving up the cost of the bottom line. Then what's happening is, because of that, that's eating into the profit margins of said companies, and then what's happening is they then turn around and then begin to lay off. Correct?
Exactly. Yeah. I mean, it's what's going on in the marketplace right now. We have money flowing, and then now we just it's hard when interest rates are high. And it's not just that they're high.
Mm-hmm.
That's one piece of it.
Mm-hmm.
It's just that they doubled in under 12 months.
Mm.
That's the problem. Had they risen rates over 3, 4 years, we'd be okay. We'd be okay. We're aware of it. We know we can plan for it. But when you do it in 8 months, 7 months, everything stops.
Just stops, guys. Unfortunately, that is a problem. That's a big problem for everybody, and I'm sorry to hear that for everybody as well. So I know it's kind of boring, but at the exact same time, we got to look at what's going on in the job market and explain what's going on because this came out on Friday, last Friday. Of course, we didn't visit with you guys until this Friday, and so that's what's going on there. Now, Cliff, man, let's dive into this subject real fast, man. Me and Cliff go back and forth on this, and it's cool. Here's my question to you, Cliff. And guys, if you're on Instagram, guys, I'm sorry. Instagram is tripping. They just kicked us off again. Don't worry. I'll re-air this again. So don't worry about it at all. Okay. Are we at the bottom of the real estate market, Cliff? What are your thoughts on that, brother?
I think I think if we're not at it, we're close to it.
Mm.
I think this is the end of the cycle. Now I don't know how we're gonna rebound, but I think we're close to the bottom.
Close to the bottom? Okay. My opinion would be this here is I don't know. I don't know because of the fact that there's so many variables that are shaky right now. You got the bond market crashing, the T-bills market's crashing, and a lot of the banks that fund FHA conventional, they buy a lot of these T-bills and bonds, and that's crashing. Did they buy them before the Fed began raising the rates? Is it the same SVB scenario? That's what's going on there. Number two, I think that there's a huge correction is coming. So I don't think we got to the bottom because we haven't seen a huge correction yet. We've seen the decreased property values, but I don't think we've seen a drastic one yet. So I think that's coming. And then number three, I would say the Fed is still talking about raising more rates again, man, which lets me know they are not finished causing a little bit of havoc. And also, you actually have Congress. Congress is still spending like drunken sailors. They ain't trying to stop spending. So that's why I say I don't think we at the bottom yet.
Yeah, I mean, now Congress gonna spend their money. That's anybody. If y'all waiting on Congress to do anything, that's a bad business decision.
Terrible damn
You know
decision.
what I'm saying?
Terrible decision.
Yeah, you ain't gonna get your money back on that.
Mm-mm.
But to me, I think the Fed's gonna pause. It'd be to me if they go another 25. It don't even make sense. The market is to me is stopped.
Yeah.
It's and even the inflation rate is pausing.
Yeah.
We're getting zeros across the board month over month. So we're not getting month over month inflation. The inflation levels they're looking at are year over year.
Mhm.
But the numbers you already know is delayed. So the numbers they're looking at are delayed. If they took current values month over month, inflation has been done for a while. They're looking at last year inflation rates and comparing it to last year and saying year over year. Well, if you did that decade over decade, we're way up. Our inflation's way high if you did it decade over decade. So my point is to say that month over month, it's starting to flatten. They won't recognize that for another 3 to 6 months because they're delayed.
Yeah, which lets me know that they're messing with the numbers somewhere. They can pull out what they want to pull. I can pick and choose what they want to gauge as well. No matter if it's a conservative administration or a liberal administration, they funny with the numbers. Let's just keep it a band, to be honest with you. And so, and this is really to kind of keep us really kind of enslaved to to the winds of the market, so they kind of control the market. Now, here's my question for you, too, Clip, real fast, man. What is going on in the apartment space? You gave me a fact last week, brother, that I shared with the people, but I wanted you to go a little bit deeper there, Doc. What's going on in the apartment space, Doc?
Oh, we're talking about with the banks.
Yeah.
So basic, man. If you a bank, when you lend on an apartment complex, you're lending on 10-year terms most of the time, maybe 20-year, but mostly you're looking at 10-year. That's what most apartment complexes are on that. So if you gave loans out previously at 3, 4%,
Yeah.
they're rolling over
Yeah.
at 7.
Phew.
So if you a bank, you're holding as much cash as you can. The problem with that is they ain't lending.
No, they not.
So even if somebody's term is rolling over, they can't reissue new debt. Nobody can refinance if you are in a bridge loan. It's bad. It's bad. People getting stuck. I don't know if you know, there's a big time investor out in Florida.
Okay.
His name is Ben Mala. I watch
But
his
yeah,
stuff.
yeah, that'll be the model. Yeah.
Man, if you listen to what he said, he is paying $12 million more a year than he did last year
Woo!
because his loans rolled over.
Wow. And Ben Mala, guys, he ain't no slouch. He ain't no slouch at all. If he's paying that and he's a paper like Cliff and I, man, I'm trying to told y'all, man. So how is that affecting the commercial space, Cliff? When it comes to the apartment complexes, how is it affecting it?
Apartment complexes right now, I call them dead. You know what I mean? Dead. No demand. The prices don't make sense. The rents don't ain't nothing making sense with the deal. We look at deals all the time. I'm looking at them coming through going, this don't make sense. The cap rates have not fallen, or my bad, they haven't gone up
Yes,
enough
there you go.
to adjust with the current rates.
There you go.
Because me and Dale says all the time, who's selling right now?
Yeah.
If you're selling, it's because you're desperate.
Yeah.
Because I ain't trying to. Why would I sell into an environment where I'm not gonna get top dollar?
Yeah. Yeah. I agree with
Don't
you.
make
100%.
sense.
Don't make no sense to me at all, guys. At all, man. I tell you what, guys, it's just to be honest with you, this is a very interesting market. Now, Cliff, let's kind of roll it over a little bit. We talked about the apartment space, all right? What's going on in the residential space, man? From an appraiser standpoint, what's going on there?
Man, there's still. I would say this: there's two markets in the residential. There's the sub market, which basically to me is anything below about 300K.
Yeah.
Still strong.
Mm.
Still. I mean, I wouldn't. When I say strong, I mean it's okay. It's not falling. It's basically going flat.
Yeah.
Right. You go above that, you're starting to see it drop a little bit. But so if you're in that, and I like the 300 and under market. That's a good rental.
It is.
That's a very good flip type market.
It
So
is.
they're still buying because the payments are still low.
Yeah.
Even if you raise interest rates, they're still decently low.
Yeah.
Once you start cracking that, you start getting into mortgages that are $2,000, $3,000, $4,000 a month. The average person's not paying $50,000 a year in a mortgage.
No, they're not.
It's too high. So I'm seeing that happen right now. The market is dropping. There's no buyers on the market. There's very few sellers. For me, I'm looking to buy.
Yeah.
I see deals in my backyard I ain't seen in years, Dale. I'm seeing sub $100,000 deals in Dallas. I ain't seen that in years.
He ain't lying in D-Town. Yes, sir.
So me, I'm in buy mode. Because let me ask you something, Dale. Let's see if I'm right.
Okay.
Right?
I'll let me.
Is the market going to be higher in 5 years?
Potentially, yeah.
Why am I? To me, it's definitely going to be higher. I want to buy now,
For sure.
knowing in 5 years, I'm going to buy with equity, let the appreciation do what it does, and in 5 years, it's going to be a winner.
Yep. And you can either refi or cash out and go on to the next deal. I think this is going to be probably the biggest shift in wealth that man has ever seen. I believe it. I believe it, man, because it's affecting every single industry. The economy is not roaring. It's stalled at all. And people are uncertain. I believe that I tell you every time, the third and fourth quarter are going to be third and fourth quarter in 2024 are going to be probably some painful times. Because I think that's when the correction is going to really happen. Because you have to hear the Fed chairman say he's making, I believe, one more uptick in the interest rate. Then he said what he's going to do. He's going to pause to see what breaks. So they are planning for something to break. What's going to break? We're going to see.
I'm seeing some crazy stuff. The car. I know we don't talk. We go into real estate, but this is a side note. What I'm hearing about the car market is typically when you go to them small little dealers, right? They got 20, 30, maybe 50 cars in a lot.
Mhm.
When you go in there, they typically sell you the car and they have financing at the location.
Yeah.
And then when you get that financing, all they're really doing is they have maybe 5 or 10 credit unions they work with,
Yeah.
and they just send them the application.
Yeah.
They ain't lending there. So those small car dealers, they used to have 10 people who would lend because it's credit unions. The credit unions are bringing in their credit.
Yeah.
Now they have 2 or 3.
Mm.
So they can't sell all those cars on the lot because when they come in for financing, those 2 or 3 are strict.
Gone.
So they can't sell their cars like they used to.
Gone.
And if y'all paying attention, car repos, all-time high.
All-time high. It's because people manufactured a pay raise, Cliff, by putting that money on credit cards. So credit card debt is up and savings is down. That is not the signs of a roaring economy. And so I'm just saying, guys, to answer the question, do we, me and Cliff, believe that we have hit rock bottom? In my opinion, I would say no. I think that now, Cliff, I think you may have said it. Do you think we hit rock bottom, Doc?
I think we close.
Okay.
I think we close. But I've been saying for a while that I thought that we would dip, they would cut going into the second half of the year, and we'd see an uptick.
Mhm.
With that first cut, that is a signal to the market.
Mhm.
We're on the backside of this, and there are only cuts from here.
Yeah. Yeah, that's it, guys. So we just want to come on real fast, guys, to answer that question. Are we at the bottom? Not yet. Cliff said we're close. I believe we're close too. My question to you: are you prepared? Are you prepared now, guys? We normally go through a strategy, guys. It's simple. Negotiate real quickly. I think joint venture strategies are going to be key. You want to be consistently patient so you get the proper leverage. Very simple. When you do these first 2 things, which is negotiate and then consistently patient with the proper leverage, lending is easy. It's the easy thing because a valuable deal brings the money. Would that be right, Cliff?
Yeah.
All day long.
They attach the money to the deal.
That's it. Bring a deal. That's it. Now, guys, let me tell you this, guys. It is here. It is here. And those on Instagram, you're going to see this as well. You've asked for this, guys, and we finally got it done, which is great. So thank you for your patience. And you'll see this on our Instagram pages, guys, as well. Link will be in our bios, and there'll also be a link for you to click on. Once you guys check this out, and then you'll see what's going on. Here we go. Good, guys, it's your partner, and y'all, it is here, guys. You've asked for it, and your partners have delivered the real estate course on how to locate distressed properties in your town in today's economy. Now, what do you get in this course? Well, you get a day-to-day blueprint on how to locate the exact databases that actually have a list of these distressed properties. And we also include a bonus strategy as well, also to where you can actually get a list directly in your town by calling a certain number. All right, guys. Number 2, once you locate these properties, you're going to have to understand how to market to gain the attention of the sellers of these properties so you can begin to negotiate. We give you an actual blueprint on how to get that accomplished. And number 3, we also give you access to our cash flow analyzer. This is the exact spreadsheet that we use to vet every single multi-million-dollar transaction that we actually acquire, whether it be a single-family residence, a commercial property, or an apartment complex. And guys, you get all that for the cost of $97. That's the entire cost for the entire course. Just $97. Click on the link below swipe up or DM me. I'm ready. Guys, that is the course, guys. Here is the link that you guys can do. Matter of fact, I'm gonna make it bigger for everybody so everybody can see what's going down. Here we go. Boom. Make it bigger for everybody. Give me one sec here. Give me the classic. I want the classic view. Here you go. Here it is, guys. It's how to locate distressed properties in today's market. Guys, it's just $97. That's all it is. Just $97. And you also get the cash flow analyzer, as well as we give you a bonus strategy of you can actually call a certain number for your local government, and they'll give you a list of distressed properties in your town. We give you all that strategy, all this stuff, as well as the cash flow analyzer for $97 total. That's it. Cliff, is that a good deal? What do you think?
It's an amazing deal. I mean, everybody can afford it. We try to make it that way so y'all have an intro and just getting started. You know, my whole thing that I always try to pitch is one deal could change your life. One. We talk about doing all these deals, and Dale the king of them. He done a lot of them. You know what I mean? But if you can do just one, and so this is just a basic education and understanding how you can start with one. And once you understand that one, two becomes 10 times easier. Three starts rolling. So this is our introduction just to show y'all, man, have an opportunity to learn, show what we're trying to teach you. And then we're also having a community available to where you can actually be a part of that. Questions that you have, things you want to get into. You may be working on a deal. We can allow all that through the introduction of this course. So this is a great deal.
It is, guys. And to be honest with you, our goal is to make real estate as easy as possible. As easy as possible. Me and Cliff, we didn't have this type of training. We didn't. No. We had to figure it out on the fly. So we had to lose money, hit all the potholes, get mad, cuss people out, want to fight people because of the fact they try to screw us over. We had to go through all that stuff. Am I lying, Cliff? We ain't lying. We got some stories for y'all. You're going to be like, what the hell? But, man, it's just – so what we've done is we said, okay, let's just give them the blueprint, everything that you actually need, guys. Included in that is our spreadsheet called the cash flow analyzer. We use it as exact same spreadsheet to vet every deal, whether it be a commercial, apartment complex, or a single-family residence. We use this exact same spreadsheet. You get all of that for free. And in the training, we show you how to use it, how to actually use it. It's simple, guys. So, Cliff, you want to say anything, man, before we exit Big Dog?
Nah, I mean, for me, I know everybody – you got people who are going to be looking at this time and time, man. They look at it like 97. I'm telling you, if I had it, I'll tell you the first group that I had that I was trying to interested in, I think they was asking 8,000-9,000.
Yep.
And I'm telling you, as someone who knows some of them people who's done that, we're giving you the introduction, the simple, the breakdown for trying to find real estate, and one deal. One way to understand it, a lot of information. Take a chance. We're going to be able to show you the right way. So I think it's a great deal. To me, it's a no-brainer. But to everybody out there, man, I hope y'all like it. We're willing to keep moving with y'all and move forward, and we're going to grow this thing. So I want to keep it moving, Dale. See how many people we can get rolling in this.
Me as well, brother. Me as well. And also, guys, if you have a deal, we will partner with you on the deal. It has to be a good deal. It can't be no janky leg deal, y'all. It can't be no deal with terrible numbers in a terrible area that don't make no damn sense. You gotta. This is why the course is so important. Learn how to locate the proper distressed property with the right numbers. The keyword is right numbers. That's it. But that's all we have for today, guys, man. Thank you so much for your time, man. You know how we end it every time we do this thing. Before you leave, and while you can, you see that thing, take that damn picture and give it to your mama and them, and holler at your partners. Y'all have a good weekend, guys. Peace.
God give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace.